Alan Kohler here with That's Business, part of the ABC Business Daily feed. And this week we've got Scott Wyatt, the CEO of Viva Energy, owner of the Geelong oil refinery and a network of Shell service stations and convenience stores, and also owner of Australia's most poorly timed fire. The refinery caught fire last Wednesday night in the midst of a war that's closed the Persian Gulf, the Strait of Hormuz, and sent fuel prices soaring. So the question now is, what will be the long-term impact of both the fire and, more importantly, the war? And also, how did Australia end up with 2 refineries down from 10? Should we have more of them? Or will we end up with none, as we did with car manufacturers? Let's ask Scott Wyatt, the CEO of Viva Energy. Welcome to That's Business, Scott Wyatt. Thanks for joining us.
Thanks, Alan. Thanks very much for having me.
Let's start with the fire last week. You must have... You mustn't have been able to believe it when they told you that you had a fire at Geelong. I mean, how did you find out? What were you doing? You were asleep at the time?
No, I was. It was 11:15 at night. I was actually talking to our general manager of the refinery, Bill Patterson, at the time. We were working through the final details of the cargoes for the first 2 cargoes that the government was asking us to acquire on their behalf, and obviously at that point, shortly as 11:15, the call came through about the fire at the refinery, I got in the car and drove to the site, and
straight away you went down there straight away?
Yeah, straight away. Got there about 3:00. Obviously, by that stage, the response teams were all in place. The incident was being managed, and as you need to do at that point is obviously just start preparing for, you as the CEO, there's not much you really can do in the response. That really sits with the response agencies and the team, but certainly can help with, the communications and starting to engage stakeholders. And obviously, as a public company, you need to do ASX releases and then media and try and get in front of this as much as we could, and just support the team.
That was your first fire, wasn't it?
It's my first fire of that. Yes, completely. It was. It's a significant event. There's no doubt about it. It's had a big impact on people. It's a confronting thing to be through. But look, I'm super proud of the way the team has managed it. I think there's just, as I said at the beginning, just textbook response. Has certainly kept people safe and certainly put us in the best position to recover from this. So an excellent job right across the board, including all the response agencies that turned up, and have been there ever since. It's been a tremendous community effort, actually.
Do you know what happened yet and what went wrong?
No, we won't. We don't know. We won't know for some time. Obviously, the focus since the fire was really managing the incident and making the area safe, and that's sort of top priority for now.
You got no idea? Haven't you got any idea what happened?
The time for investigating the cause of the incident is obviously ahead of us. As I said, for now, the focus has been on keeping people safe and getting the area under control and safely restoring operations as well, so that we can maintain production. So that's been the work the team's done over the last week. It's nearly been a week since the incident. Obviously these are incident like this, a fire in a refinery, is something we work incredibly hard to ensure doesn't occur. And that covers the design of the plants, the way we maintain them, the inspection programs we have, and including how we operate the plants. So it is something that we put a lot of attention to and a lot of investment in. So it's pretty disappointing for everybody involved when something like this happens, as well as quite confronting as well. So that's been a key focus of just responding to that. Our safety programs are, obviously also designed to, if something like this does happen, our response is absolutely critical, because the most impactful thing you can do in the event you do have an incident like this is obviously respond well, contain the fire, protect people and protect assets. And on that front, having seen the team respond to it on the day or on the evening as it occurred has been a first-class response. I mean, it's been textbook, really. The team at the time, because obviously actions have to be taken quickly when these things occur, did everything they needed to do to get the incident under control and provide time for the responders to arrive on site, which occurred quickly. And by the time I got to site, it was was well and truly, the operating team was well and truly in place, and the incident was under control. And since then, we've obviously taken all the steps to get to where we are today, which is to start to get access to the site, and then obviously start the process of understanding what's occurred.
I think you said on the weekend that production was at 80% of some products and 60% of others. Is that still the case? And how long do you think that'll be the case?
Yeah, that's the mode we're operating in at the moment. It allows us to minimise the number of units in operation, particularly around where the incident occurred. And so it's a kind of a safe operating parameter at this current time. As we get access to the area, we hope to be able to inspect the units that will allow us to restart and get to close to over 90% of our production capability. And in some cases, I think we hope to be able to get towards 100% in due course. But obviously, there's a period where we have time we need just to inspect units that have not been directly affected, but potentially indirectly affected, make sure they're safe to restart. And that process will happen over the next few weeks. And that, as we announced on Monday, should allow us to get to over 90% of our production capability within that time.
Will there be any permanent reduction in capacity?
No, I mean, our expectation and our plan is to repair the unit. We don't know how long that will take. That's obviously subject to further inspection, but to bring that unit back online and ultimately get back to full production. This unit that has been affected largely makes alkylate, which is used in high octane fuels. So it largely affects our production of premium fuel, so 95, 98, and also avgas, which is used in small engine aircraft around the country. So the majority of what we produce at Geelong will continue unaffected once we've brought all the units back up to their normal capacity.
Okay, let's talk about the update, the trading update you put out on Monday as well. You revealed in that your margin, your refinery margin, had increased from $7.9 US per barrel to $22. So can you explain how that came about? Because you get to charge import parity price for the product, right? But didn't the cost of doing business, the cost of crude oil, also go up? It just didn't go up as much? Is that what happened?
Yeah, it didn't go up as much, Alan. I think obviously the world is short crude at the moment, and that crude is normally processed by the crude that comes out of the Middle East is an important part of the crude diet for refineries within our region, where where Australia sources a lot of its refined fuel. So those refineries are short crude, and as a result, they're making less refined products than they would normally make. So the cost of both crude oil and refined products have both gone up as a result of this conflict. To put it in context, in terms of where the oil price sits today, it's gone up about $30 a barrel since the end of February. But the cost of buying diesel and jet fuel from the region has gone up by about $120 a barrel, so significantly higher, just representing the huge demand for those products. Petrol's gone up by about $50 a barrel, so gone up less, just reflecting that the demand for gasoline is not as strong as it is for jet fuel and diesel, which is they're the fuels that are the engine room of the economy, really, within the Asia Pacific region.
But that's a tripling of margin. Did you consider not taking it all as margin and perhaps keeping the price down for consumers in Australia who are, dealing with a problem of cost of living?
Yeah, I mean, it's important that our refinery obviously plays a role in continuing to provide supply to the market, and refineries in Australia compete with imports. I mean, the two refineries that are in Australia make about 20% of Australia's fuel, so it's a relatively small proportion, but a really important proportion during these times, and we compete with imported fuel because that's the alternative and the way that we supply the country supplies the rest of the market. So when you talk about import parity, that's the maximum price that the refineries can ultimately charge for the fuel that we make. For a long time, it's been a very difficult business to run because imported fuel is generally quite cheap. It's been made by large-scale refineries overseas that are typically 10 times the size of refineries in Australia, and often in quite lower cost jurisdictions. So it's been a challenged business, and that reflects the the arrangements that the government put in place back in 2021 to provide support for the refineries in Australia to allow them to continue to make enough cash to continue to run the business, both in an operating sense and in a maintenance sense within that environment. And it's been a really important program that's been put in place that has lasted, obviously, through that time. And the current government has reviewed and refined and improved that mechanism to reflect the higher cost of doing business today. And without that, we'd probably have no refineries left in Australia. So that's been critical to keeping the two refineries running. We're just at a moment in time where the refineries, because of the shortage of fuel, are actually playing an incredibly important role and are able to actually return a profit through this period of time as a result of the huge demand for refined products, as well as play an important role in continuing to supply fuel to the country. So when you look at how much money the refineries are making at the moment, you need to look at it in context of a multi-year program of operation that has had some very difficult times and right now is obviously enjoying, from a refining sense, some good times, but it's a relatively small period of time in reality.
So just to be clear about margin and price then, so you're saying you supply 20%, the imports are 80%. So are you saying that there wouldn't be much point you keeping your price down for just that 20% or whatever it is, 10%, in fact, for Geelong refinery, because, it's being sort of swamped by the import fuel. Is that right? I mean,
the majority. The majority of the cost of fuel is represented by the 80% of fuel that's being imported. I think we all want refineries to continue to be part of the Australian energy security mix, and to do that, the refineries need to be profitable and they need to make money to obviously continue to run sustainably and make the investments that we need, both in running a safe and efficient operation, but also continuing to invest for the future. And we've just come out of a program late last year of upgrading the refinery to produce low sulfur fuel, so much cleaner fuel for the environment in Australia. All those investments are not possible without obviously a profitable business, and obviously and also the support that we get from government from time to time through the fuel security services payment.
When you said before that about that support that you're getting from the government, are you saying that the last two refineries at Lytton and Geelong would have actually closed without that support?
It was absolutely that was the challenge we faced during the pandemic. I mean, running refineries during the pandemic was an incredibly difficult thing to do because people were not travelling, so no one was buying petrol. We were still selling diesel, but of course no one was flying either, so we weren't selling jet fuel. And the reality of refining is that when you are processing a barrel of oil, no matter what, if you can't just process a barrel of oil and make diesel, you also make jet fuel and you also make petrol. And if you've got nowhere to sell it, it becomes very difficult to run a refinery. We had to impair the operations of Geelong significantly just to be able to run a feasible operation that made the minimum amount of petrol and jet that we could through that period of time. It lost an awful lot of money, and that environment, we didn't know at the time how long that was going to continue for, but it was unsustainable for us to continue operations, particularly coming out of a period of time that was already quite a challenging period for refining leading into the pandemic. And we went into the pandemic with 4 refineries. We came out of it with 2. So we did lose 2.
And you seem to be saying that if it wasn't for government support, we'd have none. So the refinery industry in Australia...
It was absolutely hugely challenging, and that drove us to sit down with the government of the day, with Minister Taylor at the time, and be frank about the future of refining. And that was what ultimately was the birth of the Fuel Security Services payment. And that all that does is provides a safety net. So if refining margins through a period of any particular quarter in a year because we obviously compete with refineries overseas, we're a price taker in that regard. If that period is below a level that's not just that's unsustainable for refineries to operate, that's when the payment kicks in. It's only kicked in for us in one quarter since 2021, so we haven't needed to call on it through that time, but so it's been highly effective in terms of getting the right balance between the interests of the public and the interests of our company and continuing to run the refinery. But it was important to provide the confidence for us at the time to continue to run the refinery through that uncertain period of the pandemic, and still be here today to support the country in a different challenge that we face, but still a significant one.
Yeah, well, so, as you say, we used to have 10 refineries. Now we've got 2. How many refineries do you think Australia needs?
Oh, well, look, I mean, obviously
Or
right
should
now,
have? I mean, how many should we have?
Yeah, I mean,
Two's a bit random, isn't it?
look, it is, but when we had 10 refineries, we were pretty much self-sufficient at that time. So there was enough refineries to meet all of the requirements of Australia. And of course, you've got to remember at that time, we also had a significant reserves of oil that those refineries were able to process. And as a country, we were relatively self-sufficient. Since that time, the amount of oil that's been produced has steadily fallen. There's been an emergence of large-scale modern refineries being built in our region. As I said before, not just refineries, but refinery complexes that are often 10 times the size of the refineries here in Australia. They're using more modern technology. They're more flexible. They're more efficient, therefore more effective to run. And that's been the challenge for our refineries here in Australia. So that's been obviously the headwinds we've faced. That's why refineries have progressively closed, as well as the significant geopolitical challenge we faced with the pandemic. But we are where we are. We have 2 refineries that are playing a really important role today, making 20% of Australia's requirements is not insignificant. This is still material. At this time, we'd love, obviously, probably would be a great thing to have more and to be more independent, but we don't, and I think that'll be obviously be an important conversation as we come out of this. Is I don't think anyone wants to live through this again and have the level of insecurity that we feel at the moment. So there'll be, I imagine, close examination of what are the options to improve the level of energy security we have in Australia as we go forward from here.
Yeah, well, you haven't really answered the question. I mean, are you prepared to tell me how many you think we should have? I mean, is there a number?
It's always a balance, Alan. I think many countries have obviously more refining capacity than we do, but they also have more strategic storage than we do here in Australia as well. So I think it's a combination of both refining capacity and storage to give you a longer period of time to sustain if supply is interrupted. And I think ultimately the solution is a combination of the 2 things. We are where we are in terms of what we have as from a refining capacity in Australia. Doesn't mean we can't build more from here. And obviously, if you build new, you'll be building more modern refineries. We can also add capacity to the refineries we have, but we can also build storage. And storage is probably, given where we are, is probably the fastest and quickest way to build more robustness into our position here in Australia.
In fact, we didn't seem to have much storage at all when the war began. I mean, we only had a month or something. That wasn't great, was it? I mean, how much storage do you think we should have?
Well, I think the storage we have in Australia is sufficient to meet the normal commercial requirements of the country. And you've got to remember, for 99% of the time, it serves the country well. It's a good balance between meeting the needs of consumers and doing it in the lowest cost way. And obviously, both those things are important. But it doesn't sustain you in a very in a crisis like we're facing at the moment. That doesn't occur all the time, fortunately, but can occur from time to time. And it's a question for government about what is the right level above the normal commercial needs of the country that the country needs to hold in order to weather these sorts of events more successfully than we might feel we've weathered it at the moment.
Would you be inclined to build another refinery?
They're expensive, Alan. Look, we're a long way from the markets, and it's a significant, and they take a long time to build. Like the modern refineries are big investments. They can take 5 to 10 years to build, and you have to look at and then they have to deliver a return to whoever invests in them. So the challenge at the moment, and the challenge right around the world, is if you're facing into a future that's 10, 20 years out, and obviously in the midst of an energy transition with renewables and playing an increasingly important role, is the case there to build a new refinery with that longer term outlook, just from a pure economic sense. And that's why you're not seeing the level of new refineries being built around the world at the moment, because as everyone knows, in 10, 20 years time, the demand for hydrocarbons is going to reduce. So from a pure commercial point of view, Alan, you probably wouldn't build one. But obviously, we're dealing with
Yeah.
different sets of issues at the moment.
Right. Okay. I was just wondering whether you think that given what's going on with the price of oil and so on, and also the cost of renewable power transition. I mean, yeah, the energy transition is going on, but data centres are driving up the price of electricity. Do you think it's possible that oil makes a comeback?
I, I think oil hydrocarbons will, continue to play. Will have a much longer role to play in some of these hard to abate sectors. So, aviation, mining, road transport, they're all heavy users of diesel and jet fuel. And yes, there are renewable fuel options to play a role, but they will take a lot longer to commercialize in the quantities that we need to continue to enjoy the economic lifestyle that we have and the ability to continue to fly around the world. So I think, those hard to abate sectors will take some time. Obviously, road transport, or particularly light vehicles, clearly will progress more quickly. EVs are here, and they are, a very effective way of moving to renewables and reducing the dependency we have on hydrocarbons for that mode of transport. And you can see that with petrol demand in Australia. Year on year, it is declining. It's declining, up until this point, probably primarily just through more efficient petrol vehicles being deployed in the fleet, but in the future they'll be driven heavily by the adoption of EVs. And obviously what we've been through in the last few weeks is no doubt going to drive up the uptake in EVs and give it a welcome boost. But it's going to be mixed across the sectors that hydrocarbons play a role in terms of how quick the adoption of renewables can take hold, and how long hydrocarbons will continue to be needed.
Just back to the present situation with the war and the Strait of Hormuz and everything. The managing director of a big energy trader, Vitol, Russell Hardy, said at a conference overnight that the oil market has lost 1 billion barrels of oil permanently. Does that sound right to you? And if so, what's the impact of that?
I mean, I think that there's a very long tail out of this, Alan. I think even if the straits were to open tomorrow and oil started to flow, it'll take a long time for that oil to find its way to the refineries that normally process it, and for those refineries to then turn that into refined products. So I think regardless of how quickly that resolution is found, we'll be dealing with the physical effects of what's occurred for probably the rest of this year. That will obviously be reflected in the price of fuel as well. Unfortunately, it's going to be an elevated period of time because it's been such an impactful, and it's been a very impactful event. Obviously, there's been damage in the Middle East to fields and production and a whole range of facilities that make, not just related to fuels, but a whole range of other products that will be impacted as a result of this conflict. That will take quite some time to recover, and that's unknown at this point in time, and may take a number of years to be fully recovered.
So in your business planning, what's your thinking about how long the Strait of Hormuz will stay closed or almost closed?
I don't think anyone knows that, Alan. To be honest, it's really a day-by-day, week-by-week assessment. I think we can't control that. What we can control is continue to ensure that we find the fuel that Australia needs, and continue to make sure that flows to the country to ride out and buy time to see this resolved. I think that's what we can do, and that's what we are doing. So every week we're able to roll forward our import program, and we are typically buying fuel 6 weeks in advance. So we're into June now. Every week we're able to do that is another good week. It gives us another week to see a resolution to the conflict, and then a resolution to the normal flows of oil and refined products that we all rely on. So that's our role. That's what we continue to do, and obviously at a local level continue to run our refinery and support the supply through refined products here in Australia is also an important role we play.
So what are your suppliers, the refineries in Asia, telling you about when they're going to run out?
Look, as I said, every week we are rolling forward our import program. So we're into June, and we're continuing to secure the cargoes that we need. We haven't been unable to to find fuel. We haven't had any cargoes cancelled, so we're still having good success in that. And part of the reason for that is, look, there's still oil flowing out of the Middle East. So some of it's coming up by pipeline, and there are still maybe less now that the US blockade's in place, but there's still been oil coming out of the Middle East. We have some countries that are drawing down on oil reserves. So China's doing that, for example. So that reduces the demand on traditional, oil out of the Middle East. We're seeing some demand destruction. Certainly, obviously, the high prices just does impact demand. There are certainly consumers and segments that can't afford necessarily to buy as much high fuel as they ordinarily would. So the region is reducing demand, and we're dragging in fuel from places that we ordinarily wouldn't be sourcing it from, such as the US, much further away, more expensive, but still able to get to Australia. So we are continuing to find ways to fill gaps and ensure that we have got continued supply. Demand in the region is coming down, so the system is balancing somewhat. It doesn't mean it doesn't become more challenging the longer this goes on, but we are having good success in keeping the country in supply. And I think I just would also say, and obviously the government's going further now, and also acquiring cargoes through companies like ours to build greater contingency if we need it in the later months of this conflict if it continues.
So I'm just trying to get a sense of when, if this thing drags on, at what point does the crunch happen where there's a real problem?
Well, I think we don't know until we get close, until we get there. In many ways, it doesn't sound like obviously a sophisticated answer, but it is the truth. You don't know how much demand will continue to be reduced. And this is not just a story about what Australia does, it's a story about what the whole region does. And there are certainly countries that are less able to afford the fuel that we need than we are. There are continue to drag and bring in fuel from further afield. US is a net exporter, and that's servicing us well in the meantime. And we don't know ultimately how long this is going to take to get to a resolution. So they're all variables we can't control, but we've got enough length in the supply chain, 6 weeks out into June, to continue to monitor it. And there's time within that purchasing program to take different actions if we start to see that cargoes can't be acquired, that we actually are running to a more structural challenge, and time for government to take action if they need to. You've got to remember that whilst 15, but let's call it 15, maybe it won't be as much as 20% of the oil has been impacted. There's still 85% of the oil that is flowing, and so refineries are still operating, and there is still fuel available. So it's not like there's a cliff out there that we're sailing into. It's a period potentially where we won't be able to acquire as much fuel as we would like, and demand will need to be reduced to support that. But we're not at that point at this time, Alan.
Yeah, but the International Energy Agency has been saying it's the biggest disruption to oil supplies in history, worse than the oil shocks of the 70s.
Yeah.
So that is alarming.
It is. It's alarming in one sense, but as I said, it doesn't mean there's no oil. It doesn't mean there's no fuel. It means we might at some point have to make some difficult choices as a country in terms of what we can continue to do and what we can't continue to do. And governments are no doubt planning for that at the moment, but we're not at that point. And while the fuel continues to flow, and we're continuing to meet demand requirements in the short term, the best thing we can do is keep doing what we're doing, because that means and reduces the impact on people, ensures we continue to run a robust economy, but be ready to take more difficult actions at the point that we need to. But we're not there yet.
And just by the way, did the Prime Minister's visits to around Asia over the past few weeks make a difference?
Yeah, it's important, right? They are the countries that we source fuel from. They operate refineries that are an important part of the Australian supply chain. So we're important trading partners with them. We're important customers as well. They do have fuel to sell. Obviously, there's a lot of demand out there, and it's important we step up as customers and and ensure that we're being heard, and that helps us when we go into the market and talk to, through our trading operations to acquire fuel. The fact that we've got that government to government relationship is an important part of seeing Australia maintain supply.
That's great. Well, thanks very much for talking to us, Scott Wyatt.
No, thanks, Alan. Appreciate the opportunity.
Thanks so much for joining me on That's Business. You can find That's Business on the ABC Business Daily feed every Friday. So you don't miss out, make sure you follow ABC Business Daily to find us on ABC Listen or wherever you get your podcasts. Carrington Clark and the ABC Business Daily team will be back in the feed on Monday.